Nike reported quarterly financial results after the markets closed on Tuesday, October 1st, that disappointed stock market investors. Nike stock price is down over 6% on the day following the announcement. The company's sales are falling, profits are falling, and you can understand why they felt the need to change the CEO. Now they delayed their investor day, they're taking away their guidance for the year, and there's a lot of trouble brewing at this once dominant athletic apparel company. So in this video, I'll review Nike's latest quarterly financial results. I'll also update my buy recommendation for Nike stock. Remember, I've had Nike stock rated as one of my top stocks to buy this year. It's one of my worst performing stock picks in 2024. Am I going to keep Nike following these quarterly results? You're going to want to tune in to find out. So let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Nike's results. First quarter revenues of $11.6 billion were down 10% from the same quarter last year. Remember, this is a company that's typically growing at roughly 10% every year. So for Nike to be going backwards is a big disappointment, to be sure. Nike direct revenues of $4.7 billion were down 13% year over year. This was a major strategic area of focus of the previous CEO, the departing CEO, and that strategy has turned out to be a huge failure. The focus on direct revenue and de-emphasizing wholesale partners has really backfired. Wholesale revenues of $6.4 billion were down 8% year over year. And in one bright spot, the company's gross profit margin increased again by 120 basis points to 45.4%. This was the primary reason why, one of the primary reasons why the departing CEO wanted to focus on Nike Direct and cut out wholesalers, because you can sell directly to consumers and that will garner higher average selling prices than if you were to sell to wholesalers, because you have to sell to wholesalers at lower prices. And so, yes, it has had the impact of having a better gross profit margin for Nike, but the downside is that sales have decreased considerably as a result. And that's kind of what you would expect. Unless the strategy worked very well, you will have expected that sales would fall because Nike's products would be available in fewer locations. Customers would see Nike's products in fewer locations. One additional downside to this strategy has been that it provided an opening to competitors, right? Retailers like Foot Locker and Macy's and others were used to having a significant amount of shelf space or available store space dedicated to Nike's products. Well, when Nike de-emphasized wholesalers, that created an opening. And so these retailers and many others look to other apparel providers to fill those spaces. And since they were available and customers were going to those stores, they were buying some of those products because that's what was available. This strategy did not work very well. And as I mentioned in my video about the change of CEO, which I will link to at the end of this one, that's the primary reason why Nike felt it needed new leadership. This was a big swing in terms of change in strategy. And since it failed, then the CEO is going to be held responsible, going to be let go and replaced. You don't often get many opportunities at a big strategy like that. One of the other things Nike said is that it's going to delay its investor day. It's going to give the incoming CEO some time to get acquainted with the company, get acquainted with the role. The good news is that the CEO, the incoming CEO, is Elliott Hill, who's a longtime Nike veteran, familiar with the company, and hopefully will come in. And I think the big change with the incoming CEO is going to be a refocus on wholesalers, reestablishing those relationships, seeing how big of a downside it's had. I think the new strategy or the new strategy should be the old strategy. Come in, focus on those wholesalers, build those relationships, take back that shelf space. If for no other reason than to just repel competition. If you're taking that shelf space, that means competitors are not going to take that shelf space, and you can establish your dominance again. I think wholesalers will be happy to welcome Nike because it has a stronger brand recognition than really any other brand in the apparel space. So I think retailers will take Nike back, although they might be hesitant in the types of deals they sign with Nike. One thing I did like from Nike in the latest quarter was an increase in advertising expense. Demand creation expense of $1.2 billion was up 15%, primarily due to an increase in brand marketing and reflecting investment in key sporting events. Now, I wouldn't be happy with this strategy with many other companies, but with Nike, since they've demonstrated so much skill in this regard, I like when they do more of this. So I've talked about this before with other companies like Netflix, for example. When Netflix announces an increase to their content budget, I like to see that from Netflix because they've shown great skill in creating content that viewers like to watch. And Nike has shown great skill in advertising that creates demand for its products. And so when I've seen that over a long period of time, I want to see that the company do more of that, because I know they're good at it. I know it's very likely to lead to a positive response. So I like to see this from Nike in the latest quarter, reaccelerating the spending on advertising, which will pay off in the next several quarters and in the next several years. And at the same time, I like that they decreased operating overhead, which was down 7% to $2.8 billion, primarily due to lower wage-related expenses. I like to see companies decreasing overhead. I think there's a lot of waste in corporations, in management, in corporate spending on things like the corporate headquarters, on things like travel, on expense budgets, on the annual Christmas party, etc. I think there's a lot of waste in corporations. So anytime I see a decrease in overhead, I am happy about that in companies I'm looking at. And as I mentioned, profitability was down 28% to $1.1 billion, which again, along the lines of the decrease in revenue, was a disappointing figure to be sure. Still, Nike's management reiterated its focus on share repurchases, buying back $1.2 billion of its stock, reflecting roughly 15 million shares outstanding. And when management does this, it's a sign that they think the stock is undervalued. And I agree with management here. Nike stock is trading at a forward price to earnings of 25, which is near the cheapest you've been able to buy Nike stock in several years. Now, they are facing significant headwinds, and a transition at the top is something I typically do not like to see. But in this case, it is what it is. The previous CEO failed with that strategy, and so a new CEO is coming in. Hopefully, the only change is going to be on that strategy to refocus on wholesalers. Now, I've had Nike stock rated as one of my top stocks to buy all year, and as I mentioned, it's been one of my worst stock picks in 2024. However, I still like Nike stock. I like it a little bit less than I did before these numbers came out, but I still think compared with its valuation, its brand power, its competitive advantages, and the visibility I see in turning the company around, I can see tangible reasons why if they were to refocus on wholesalers, the business will improve, the top line sales will improve, it will push back competition and increase Nike's brand power once again. And so because of that, I'm keeping Nike stock rated as one of my top stocks to buy right now. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.